Hello and welcome to BQ Prime's earnings conversation with PVR Inox. I have with me the group's chief financial officer Nitin Sood to decode the first quarter performance. Good morning and thank you, Mr. Sood, for taking the time.
Thank you for having me.
We'll do a quick recap of the numbers. Revenues were up 14% over the previous quarter. Net loss narrowed to 82 crore but remained slightly higher than the analyst estimate. EBITDA grew 34% while margins stood at 27% versus 23.1% a quarter ago. Mr. Sood, overall, it's showing encouraging signs of recovery. But could you tell us if the persistently high volatility in the Bollywood genre is still a concern? So we still have an interesting pipeline of movies lined up for Q2.
Yeah, I think if you look at our business, I think last 3 or 4 quarters have been quite tricky on account of, volatility in content. Hindi box office has underperformed. Hollywood had a very less number of films, last year. We see that, getting more stabilized. Hollywood has had a very good year this year, and April, May, June, we've seen some of those films doing quite well. Uh, Hindi volatility is definitely reduced. There was a lot of polarization in performance of films last year, and you had wide gaps in box office. What we are seeing, at least starting Q1, is a lot of that has reduced. Films like Kerala Story, which was again a small to mid-budget film, ended up doing 260 crores of box office. Films like Zara Hatke, Zara Bachke did of almost 85 crores. Satya Prem Ki Katha also does almost 80 to 90 crores box office. So we are seeing more stability in box office, and that's a good sign, for the industry. And the latest release, Rocky and Rani, has opened to superb reviews and great box office weekend.
So, do you think that the great box office weekend that has just begun is likely to sustain in the coming months?
Yeah, I think what we are seeing, to be honest, in the last 6 to 8 weeks, is that consumers are really coming back to theaters. And this is not just reflective of one language film performance. We've had three back-to-back hits in Hollywood in July: Mission Impossible, Oppenheimer, and Barbie. Even in regional side, Punjabi film Carry On Jatta has become the highest grossing movie for all time with 100 crore collection. A Marathi film Bapan Bhari Deva has done 65 to 70 crore box office. And, a recent success of Rocky and Rani. This is all indicating, consumers want to come back to cinemas as the content, cycle improves and there is more regular flow of content. We will see, significantly better performance in the coming months ahead.
Got it. There was a slightly a miss at the EBITDA level due to the lagging recovery in ad revenue. So I think it dipped 2% compared to the previous quarter. When do you expect your ad revenues to normalize?
Yeah, I think ad revenues is something which has lagged behind, and I think most of the advertisers have been looking for the positive commentary on the box office. And thankfully, the last 4 to 5 weeks have definitely given us that commentary. So we think, the recovery process will start from this quarter onwards. But I think Q3 is when we should start seeing a strong recovery in advertising revenue for this year.
Okay. And are the merger benefits, the synergy benefits on cost, tickets, as well as the F&B, are they in place yet?
Yeah, I think we've started work on all the merger synergies and we seem to be absolutely on track. We had given a guidance of 12 to 24 months for, full realization of merger synergies. And we'll continue to keep the markets updated, later part of this year. As you see, a lot of these merger synergies will start reflecting in our absolute numbers, whether it is ticket pricing, F&B, or, some of the cost rationalization initiatives that we have taken up. So yeah, absolutely on track, and I think we are very confident of realizing the full potential of merger synergies.
Okay, and what would be your focus on F&B in order to drive profitability? Because sales of food and beverages was up 22%, and that's quite a decent number. So, what is your focus there?
I think we are doing a lot of work. The teams are putting together a lot of effort to, look at the entire F&B portfolio. Our focus is standardization of SKUs across, PVR and Inox platform, introduction of new products, continuously revolutionizing that, relooking at, product offerings. We've just launched two big offers, which is a weekend unlimited refill on Pepsi and popcorn, and weekday 99 rupee pricing at cinemas, which is tracking quite well. And then apart from that, how do we ensure that, there is consistency in the product portfolio across all the circuits? So all of this is driving the F&B revenues up. And even in this quarter, we've seen almost a 10% growth in average spending per person on food and beverages.
So, do you think that the spend per head and the F&B especially would drive profitability more than the sale of tickets and the sale of ticket prices?
Yeah, see, definitely F&B is the first off the block, and it is showing, very strong signs of doing really well and, delivering on the synergies. But we are also, very confident that box office will bounce back, later this year after a dull 2022-23 we had. I think given the traction that we are seeing in box office, we are also confident of that recovery playing out, and also strong growth in average ticket price as a result of, the combination in the synergy.
Got it. Mr. Sood, South is typically a high footfall geography. Would like to know your expansion strategy in the southern market, also your overall guidance on new screen addition.
Yeah, so if you look at this year, we are expected to add about 150 to 170 screens, anywhere in that number. Overall, across the country, almost 40 to 45% of our screen portfolio will be in South. We've opened a few flagship cinemas like, a project, a 12-screen property in Bangalore, last week at a mall in Kanakpura by Prestige. Similarly, we are opening in Kochi very soon, later this year. So a lot of action in South, where we are going to new cities and adding more capacity in existing cities.
Okay, but will we see the current share of your premium screens also going up?
Yeah, they should go up. We are building according to the market. We are adding a lot of premium screen formats like IMAX, 4DX, ICE, etc., to the new cinemas that we are building, and in some of the existing cinemas as well. That portfolio is about 13.5% of the total screens right now. We don't have a specific number in mind, but our sense is, yeah, over the next 3 to 5 years, premium screen portfolio should settle anywhere between 15 to 20% of the overall screens. And these formats help us to even elevate the movie experience, and make the big films even bigger.
Okay, and any investments that you would like to talk about for this financial year?
I think we've already given a guidance of approximately 700 crore kind of a capex outlook for this fiscal year, which will include, new built out screens and, upkeep, maintenance, renovation expenses on some of the existing screen portfolio. There is no change in that number.
Okay, and in terms of your guidance on margins, what would be the range that you would look at?
No, we don't give any, margin guidance at all on the business, because, the business is still recovering. I think the box office still has to stabilize. And depending upon where the box office settles, your margins would be, a function of that. Given that, business has high operating leverage. But, on the revenue side, we are, targeting a revenue outlook of anything between 6,000 to 7,000 crores this year. depending upon how the box office in the rest of the year performs.
All right, Mr. Sood, thank you so much for your time. It was a pleasure talking to you as always.
Thank you.